Hi everyone. In this video we are going to analyze one single property that we found from our search. Now as you can see, I've already run a search for single families for long-term rental, and I've turned on the financing for 25% down for 30 years loan. Now let's say I like this property, the first option, and I want to analyze it further and get more accurate numbers. So I'm going to go ahead and click on the address here, and that will bring me the property analyzer, the Jet analyzer that we have. So here we have the different options for investment. We have the buy and hold, which is the first step and is activated because we ran our search based on buy and hold. Obviously you can change that to other investment options and see the numbers and compare them to see whether this property is a good Airbnb candidate, or it's a long-term rental candidate, or it's a buy to sell, a good candidate for buy to sell. Now let's take a look at the buy and hold. Here in this screen, the left side, the left column here, it's all about the property acquisition, how you want to purchase a property, how much you are putting down, what are your upfront costs. So you have the asking price, which cannot be changed, and then you have the market value, which system calculated it at this number, and then you have the purchase price. So if you're able to negotiate down the price, you can change that here. So let's say the asking price is $299, and the purchase price we were able to get a better price from the seller for $279, and that will change everything else. So once I change any value on this screen, it's going to update other boxes and numbers in real time. Let's say we're assuming a 5% for closing cost, and that's what we have to pay. We can change that if you want to. The financing is on, so we're going to go with that for 25% down, and this is our loan amount based on 25%. The loan to value ratio and the interest rate is 5. We're going for 30 years. You can change that to interest only if you want. And let's say there is a loan cost of 1%, and this is our loan cost, so this is another upfront cost that we have to pay, and this is our monthly payment for the loan. If there are any repairs that needs to be done on this property, we can put them here, rehab cost. And for that we have two modes. We have the basic one where you just put in a flat an estimate flat fee or amount for your cost for your repairs, or you can go to the advanced mode and you can see a breakdown of all the things that can be done, so you know exactly where you spend your money on. So in this case, let's say we have a $10,000 for repairs. So that's there. And look at the total capital and total acquisition. So this is how much cash you need, and this is how much you need in order to purchase a property. So the difference is what we are financing the property with. If you want to get any furniture or appliances, and this relates more to Airbnb investments, we can put them here. Again, we have the basic mode where you can just put in a estimated one flat fee, or you can go to advanced mode and have furniture or appliances. So in this case, I'm going to leave this blank. Here in the middle section is our operation, our income and expense. So for income, we have a gross scheduled rent, and the system estimated it to be $2,200. You can change that for the monthly column or yearly column, and anything you change here is gonna update the other stuff on the screen too. So let's say we are able to rent this out for $100 more. Just hit this here, and you can see everything else is updated. 5% for vacancy loss. That gives us this amount for monthly, and these two numbers are subtracted from this the rent, which gives us 2185, our operating income. So this is after we deducted the loss for vacancy. For expenses, we have listed some expenses here. So property insurance, you can add it here. Taxes, estimated 1.2 for California. You can change any of these. You can change the percentage, or you can change the monthly or yearly amounts. HOA, if there is an HOA, we can put it here. If it's something that is on the listing from MLS, it's automatically populated here. So in this case, there is a house with 0 HOA. If there are any utilities that you have to pay, we can put them here. Property management, 5%. Let's say you're paying the property management. If you're doing it yourself, you can just put this as 0, and that will give you more room here. Total operating expenses. For both income and expenses, you should be able to add more items. So let's say it's an Airbnb and you're able to charge them for laundry. You can add them here. There is an additional income you can make on this property. Or if there is anything else that is not listed here, you should be able to add the expense and then remove them as you wish. So we have the total operating expenses for monthly and yearly. And this gives us the net operating income. And then we have the mortgage payment that we had from the previous section. And that would give us the cash flow. And this is for first year, 778 per month for cash flow. Now the right column is all the the investment indicators, everything that we have to see in order to determine if this is a good investment option. The holding period is defaulted to 10 years. This is assuming you're selling this property at year 10, and obviously you can change that to 30 or 15. Our projections for the growth of the property appreciation is 4%. You can change that. Rental growth 3% and expense growth 3%. And this is coming from the area where the property is located. For the property sale, then this is happening on year 10 when you're deciding to sell the property. This is the price based on the appreciation rate of 4%. So this is how much you're selling the property after 10 years. Your loan balance at that time is this amount. And then these are the costs associated with your sale. We have the broker fee and property sale cost, each at 3%. We can change that if they need to be changed. If there is any additional cost for the sale, we can add them here. So this is how much you earn after you make the sale. And these are the numbers that you want to see as an investor to see if this is a good investment deal or not. We have the cap rate, gross rent multiplier, debt to coverage ratio, operating expense ratio, and these numbers are great if you compare different deals in the same area or different areas, and that will give you a great insight of this investment. If I scroll further down, you see the financial forecast. So everything we talked about on here was for first year. But what if I want to know my cash flow after the 5th year? Or how much equity I built into the property after the 5th year? So this is going by year 1 to year 10. And this is based on our holding period. You can change that. You can see the gross scheduled rent is going up every year based on our projection. The vacancy loss amount, you can see how much it's going to be for that year. And then let's we can see the net operating income, and these are yearly numbers. Financing, your cash flow. So the first year the cash flow is 9,000, and the 10th year is going to be 16,000. Now what is changing? Your rent is going up. You're building equity into the property. Um, and let's take a look at the other numbers here. So this is great if you want to know exactly if you sell the property earlier. Let's say you want to sell it on the 5th year, and you have to look at these numbers. So this is how much you will make if you sell it at the 5th year versus the 10th year. Now I can go up and change this to 30 years, and as soon as I do that, it will update the whole table and add all the numbers, and this is fantastic for investors. They can see all the numbers in one screen. So you can see exactly on year 30 what are your numbers look like. So I can scroll down. There's some information about the neighborhood. The neighborhood that we're talking about is highlighted in green on the map, and you can see the property here. So these are some good numbers about the unemployment, about median home value, appreciation for the last 10 years and 5 years. So you see the appreciation is much higher than what we were working on, and this is coming from the real data from that neighborhood, from MLS listings. We can look at the comps at the end, and again these are all from MLS listings. So you can do your own appraisal based on this data, and this is what the appraised value is right now. If you see something that is not related or irrelevant, you can uncheck it, and it will exclude that from the calculation for the appraised value. I hope you enjoyed this video, and good luck on your next investments.